Hello everyone, this is Dr. Shunmugam again from NISM to yet another edition of Commodity Dialogue. So today for continuing the discussion that we had on energy, so we have with us Mr. Sandeep Daga. He's founder of Rexus Consulting, one of the uh, most sought out person in risk management in the base metals market. So the go-to person in terms of base metals fundamentals and knowledge about the fundamentals and things like that. So welcome Sandeep for yet another edition of Commodity Dialogue. Thanks for your time, for
Thanks
having
for
come
having
here to enlighten us about the the base metal markets actually. To start with, we will have this macro economy discussed because that will form the basic fundamentals of the metal markets, and then we will get into the metal markets one after another actually. So where do you look at economy as leading to? Because we see full opening up in some of the economies, some closures in some of the economies, and third wave, coming up, not data being published here and there and things like that. So where do you see the economies headed towards?
Sure. Firstly, thank you very much for having me here. In terms of the global economy, 18 months back, the whole global economy was in a tailspin. We were going down and we were thinking that this is going to be the worst recession ever since World War II. 18 months later, we realized that we had the best recovery ever. So it feels like a patient going into an ICU and then coming out and participating in Olympics. This locking and unlocking created a lot of whipsaw in the global economy. More or less, the economy has now opened all over the world. The unlocking gains have been revealed. The pent-up demand has showed up, and that has pulled up most of the global economies to the pre-pandemic levels or very close to those levels. But what has happened really is that in this process, because we started running and running too fast, we have created inflation, and this inflation is getting beyond control in some places. And this is grabbing headlines, and it looks like this is here to stay. So we have recovered, but the inflation is now looking into our eyes. What has also happened is that the governments, which have spent a lot of money in stimulating the economies, in also helping the communities in the respective countries in vaccination programs as well, the spendings have gone up, and because of which the government budget deficits have gone up all over the world, and therefore it looks like they may have to raise taxes or they may have to reduce spendings in order to balance their budgets once again. To answer a question about how does it look like, it looks like that last 1.5 years has been an amazing going down and going up. But 2022 could probably be the first year of normalcy, when things calm down, the growth slows, and comes to the normal levels. And we've started seeing it already. The US growth forecast have been downgraded. China has come down to normal levels. India too could follow. And other economies could also follow. That's broadly what I think the global economy is going to behave in the next coming months and years.
Okay, that's going to be driving the commodities going forward. This is what you're in a nutshell.
Absolutely, absolutely. I guess another thing that's very important that has happened in 2021, again because we stopped and we started running too fast, is that the economies have seen shortages, and the shortages are happening across the world, across commodities, across things that we consume in our daily life. So semiconductor shortage is very well known. So automotive sector is seeing a slowdown. We thought it will get over in 6 months' time. Then we thought it got over in 1 year time. Now we are expecting the shortage to continue till 2022. And then if you talk to anybody in the international trade, those who use ships for international import and export, they are in a very bad condition because ships are not available. So if they are available, the containers are not available. The containers are available.
Costs are very
costs
high.
are very high. The freight is very high. So that's creating a lot of troubles for the businesses. And then recently, over last few months, we have realized that the world is running short on coal. The coal prices are rocketing. The natural gas prices are higher. So we are in a way kind of mini electricity crisis all over the world. So electricity demand has gone up sharply. The supply is not able to catch up. There are seasonal reasons for it. There are reasons like trade war between Australia and China, which has created some kind of shortage. But broadly, it looks like the lean over that we had to the green energy, that was a little too early, it seems. We still need coal, and we can't stop producing coal as of now. So that was that created a lot of shortages. That created inflation. That inflation that we are still facing in the industrial economy as such.
Yeah. So to quote it in short, I think I just wanted to take you to for a minute to a news item that I read about in the last week actually. So Europeans have protested against in a mass way protested against the rise in electricity charges in Europe actually. So going backwards, the explanation that you gave towards the coal. So it's like in the name of greenwashing the economy and the power sector. So they made the power, much more inaccessible to the common people, and so that's reflecting everywhere in the corner actually. So coming back to all these factors together, how is it going to impact the industrial economy or which will have an impact on the base metal markets actually?
Correct. So if you look at the industrial economy, the two sides of it, the supplies and the demand. Okay, so demand has healed, it has recovered. But supplies are facing difficulty because of the shortages and the industrial issues that we are talking about. And that's reflecting, as you can see in the charts, that the Chinese industrial output of base metals, of all the non-ferrous metals, I would say, that was growing amazingly well all through last year. But this year, it has just stagnated. There is electricity shortage. There is rationing of electricity happening in different provinces in China. So that's creating a little bit of shortage. At the same time, the COVID is not over yet. So Malaysia and Indonesia, which are very large industrial economies, which are good producer of nickel and tin and copper ores, they went into lockdown. And the lockdown started in June and still continued till August. So there was a major bottleneck of supplies coming from those places as well. Then obviously there's a sea congestion. This is what I tell people. There's much more metal floating on the sea now
rather
than on the ports now. So that has created and amplified the whole shortage story in the industrial economy.
So we will see a sort of a supply constraint and a cost pushed factor behind the prices that we see in the base metal markets actually. So demand is irrelevant to the markets because it's in any case it's coming up and picking up whatever that is coming in the market.
That's true.
So it's the cost which is going to drive the base metal markets, which is from the industrial economy side actually.
Absolutely. So yes, the demand is gradually healing, but the supply is becoming bigger constraint now.
Yes, but if you look at the bulls and bears actually, so there is a bit of bullishness at times and there is a bit of bearishness on the other hand actually on these markets actually. Where do you see the bull market and the bear market is headed towards in terms of the base metals pack is concerned?
Yeah, so basically last 18 months belonged to bulls. The bulls had been the dominant factor or dominant side in all the base metals. So in copper, aluminum, zinc, lead, tin, everywhere they have been dominant. So the long-short ratio had been in favor of the longs. The tin had been the most favorite commodity where the long versus short is almost like 22 versus 1 or 23 as to 1. Aluminum and nickel also where the deficit has started created and there was drawdown of inventories from the warehouses. That attracted bulls. In copper, by February, the long-short ratio was somewhere around 6. So 6 long for 1 short. But since then, that has been receding because the China is slowing and the supplies are gradually recovering. So that helped the long-short ratio to halve from that level. But still, longs are still the dominant theme. The bulls are still the dominant side.
It's around 3:1 or 4:1 types, actually.
Quite easily.
Okay. And will the current happenings in the physical market be able to sustain the bears which are there in the market, actually? And where do you see the market is headed towards in the next 1 quarter or so?
Right. So we can look at it metal wise. We can do one by one. We can start with copper and then look at other metals.
Of course.